Hey everyone, this is Mike with Rags Riches Trading. So today I'm going to do a video on McDonald's. So I saw in the pre-market today there was a story about McDonald's is raising the franchise fee. So that is what they charge to the franchise owners from 4% to 5%. I think this is the first fee raise in over 30 years. And it's only for new locations, so it's not going to affect existing stores or even remodels and things like that. But McDonald's is a massive company. They have stores in, hundreds of countries. So obviously every year there's going to be a lot of stores added. So this is probably going to be a big kind of windfall for McDonald's. And if you think about it, a percent increase from 4% to 5%, it's only 1%, but it's really 25%. So you take that 1% increase and divide it by 4. So it's going to add a lot of revenue to the company. So I wanted to take a look at the chart here first of all. So I do own, I think it's either 2 shares or 4 shares of McDonald's, and I think I bought them right here on this dip when the Ukraine invasion was kicking off. So the market had kind of taken a dip there, and McDonald's was one of them. So I did buy the stock, so we're up pretty good amount. I think it was 220, 230, that kind of range. So $50 a share or something like that, and it does pay a dividend, so you're getting that money, quarter after quarter, year after year. So let's just take a look at the valuation right now. Obviously, it's trading at 272, so I'm pretty sure it's going to be overvalued in my opinion. And let's take a look. So earnings, you can see, are going up nicely, right? So we have their estimated earnings per share for 2023 and 2024 are 11 and 12. So that puts the PE at 23 and 21. The overall market, I think PE, historically trades in that 15 to 17 range, when values are good. So it's a little bit, above the market, but maybe, McDonald's is going to grow faster than the average company, and that's the reason. So let's take a look at the financial statements. So we'll take a look at revenue. So revenue is growing nicely, $21 billion in 2018. You can see the dip in COVID, and then it really took off in 2021, kind of flat in 2022, but the trailing 12 months, we see 23.9. So, revenue continues to grow, as does gross profit, kind of the same profile with COVID. And operating income as well. I'm not really worried about McDonald's hiding a lot of things like stock-based compensation and things like that in their numbers. Let's take a look at the balance sheet. So cash on hand, had about $5 billion here, 4.7 December 2021. We're down to about 1.6 billion. So I always like to quickly look here, long-term debt. So they've been hovering around the 30 to 35 range. So kind of at the top of that range right now. And total liabilities, 50, 60, about 55 billion as of their last report. So let's take a look at the cash flow. Let's see if they can handle that debt level. Net income, so you can see the net income here, adding back depreciation. Here's that stock-based compensation. So, 160 million, that's really a drop in the bucket for a company as large as McDonald's. And cash from operations. So you can see, that is going up pretty consistently. So, if I take this number, let's call it 5 times 5, that's about 35. So they could pay off their debt with their free cash flow in about 5 years or so. But total liabilities are 55 billion, so debt may be a little high. A lot of people wouldn't be concerned with that because it's McDonald's. It's kind of a company that does well in good markets and bad markets. Kids love it. High-end consumers, low-end consumers. Doesn't matter. Everyone seems to like McDonald's. So I think right now for McDonald's, if you have a health savings account or something like that where you have to deploy funds, I don't think this is the right time. So McDonald's is trading kind of at the high end of that range at 272. There's just been a lot of good news coming out lately. You know, the company's been doing very well. They're raising these fees, so I would wait, you know, for some kind of hit, like a mad cow scare or some just general economic malaise before kind of moving in and making another buy here. So actually looking at this chart, I mean, it has come down a lot, but I think it was significantly kind of overvalued here, kind of priced to perfection. But if we take a look at the longer chart, you know, it really hasn't come off that much. So maybe we'll get interested in it again around the 230 range. Maybe that would be a time to take a look and do another analysis. Thank you. Bye.